Good afternoon, everyone, and welcome to Sidoti's Small Cap Conference. My name is Michael Matheson. I'm an equity analyst with the firm. Today, we're fortunate to have with us the team from US Gold Mining. Just before I get started, or they get started, let me cover some housekeeping details. We really encourage questions. You have to type them in, though. So the way to do that is at the bottom of your Zoom screen, you'll see a circle with three dots. Click on that, and you'll see a Q&A box exposed. So with that, let me introduce the team. We have Tim Smith, CEO. Tim, please take it away.
Thank you, Michael, and good afternoon, everybody. Thanks for taking the time to join us today. It's my pleasure to present to you US Gold Mining Inc. We're a relatively new company. We're just about to turn three as of the end of April. We IPO'd on NASDAQ back in April of 2023. We raised $20 million at that time with the stated purpose to undertake the rediscovery of the Whistler Gold Copper Project, which is located in Alaska. So that's going to be the basis of the presentation today. You can find us on NASDAQ. Our ticker is USGO. I will be making some forward-looking statements throughout the course of the presentation. By nature, the exploration and mine development sector is forward-looking. I would encourage you to read the detail on this presentation. And of course, this full presentation can be found on our website at www.us.goldmining.com. So the Whistler project is a gold copper project. It is about 75% by value gold, 25% copper. There are some silver credits, but gold and copper make up the majority of the economic commodities in the Whistler project. Whistler, you can see here in the map on the right, is located relatively close, just 100 miles away, relatively close by Alaskan standards, from the main population center of Anchorage. We have around 5.4 million gold equivalent ounces in the indicated category and 5 million gold equivalent ounces in the inferred. We use gold equivalency, which is a combination of gold, copper, and those silver credits, simply to express the metal content in one simple unit, which of course is normalized to the gold value. The project is 100% owned by US Gold Mining Inc., and it is located on state land, which we think is a key differentiator from some of the projects that might have the complication of native lands or federal lands. We don't have those complications, just the one regulator, the state of Alaska, that we deal with, and they are a very good regulator to work with. One of the key catalysts for putting this project together and spinning it into US Gold and IPOing on NASDAQ was the fact that the state wants to build a road directly to our property. I'll go into that in more detail coming up, but that was a major opportunity for us that we wanted to exploit. For us, it's very important to do what we said we would do. So when we IPO'd in 2023, we raised $20 million. We said that we would drill for 2 years. Check, we did that. We would restart the exploration process to uncover more potential future discoveries. Check, we did that. We would undertake mine engineering studies in order to put the project on a possible line of sight to becoming a future mine. So we undertook metallurgical studies, returned some very high copper and gold recoveries, and we completed our first ever maiden preliminary economic assessment. This is hot off the press, brand new as of earlier this month. Our news release on this came out on 2nd of March. Tech reports are currently nearing completion and will be uploaded in the coming days. I will go into more detail, but the key takeaway is a very robust net present value of $2 billion US after tax at an IRR of 33%. First, a little bit about the people. We have a strong background, a strong record in the mining sector. You'll notice that management across the top here, we're all veterans. I have 30 years experience. I'm a geologist. I've worked across the world from discovery through to mine development and production. My most recent job was with the world's biggest gold miner, Newmont. I left Newmont to come and take on this opportunity. I was excited by what this opportunity had to offer. My colleague and the chair of our company, Alistair Still, Also has 30 years experience working for many of the mid-tiers and majors. We've recently brought on Imola Gutz, who is a veteran mine engineer, again, 30 years experience in mine design and production. And we've added a special advisor, Barry Olson, who's a veteran large mine developer. Across the bottom, you'll see the rest of our governance team on the board of directors. Strong experience here based on the technical background and also with respect to permitting, good Alaskan exposure, good mining exposure, and capital markets exposure, providing governance there. A little bit about the structure of our company. Very tightly held, just 13 million shares outstanding. There are some warrants that are expiring in about 5 or 6 weeks at the end of April. If fully exercised, we will still have less than 15 million shares outstanding. This presentation was dated as of March 6th. At that time, our share price was sitting around $13 for a market cap of 173 million. The structure is quite unique. I mentioned that we are a spinco. Our parent co, GoldMining Inc, bought the Whistler project in 2015, and it was their decision and determination to spin out the Whistler asset into US GoldMining Inc. The reason they did that is they wanted to provide a structure that would bring dedicated management and funding to the Whistler project in order to be able to move it forward expeditiously. GoldMining has diluted somewhat. It started out with an 80% shareholding. It's now down to 74%. It's been diluted over time. Insiders still holding at 4.5%. To my knowledge, GoldMining has never sold a share, very supportive major shareholder. I'm not aware of any insiders selling stock as well. The public float that trades on a daily basis is this 21% of other shareholders. Our daily trading volume sits around about 100,000 shares, relatively small, but taking into account that it's a relatively tight shareholding, certainly we see multiples on that when we release news. And independent research analysts, if anybody wants to follow up with H.C. Wainwright or with Red Cloud Securities, their analysts Heiko Hille and Taylor Combolzier have both recently updated their research notes following the release of our preliminary economic assessment, so you can get some additional independent coverage there. Okay, let's delve into the results of the preliminary economic assessment. First important note, the pricing is based on consensus pricing of $3,200 per ounce gold and $4.50 per pound copper. Consensus is based on a survey of multiple institutions and banks across the sector. It's released every month. We took into account trailing averages and other factors in order to arrive at $3,200 per ounce, which of course is still well short of spot price. Gold is a little bit down today with what's happening in the Middle East, but it has been averaging around $5,000 per ounce and above over most of the course of 2026 year to date. So with that in mind, our preliminary economic assessment is based on the Whistler deposit only. Our mineral resource inventory actually comprises 3 separate resources, 3 separate deposits. We've just selected one, the Whistler deposit, which is the largest. Obviously, it's the namesake of the overall project. And within that, we have used only the high confidence indicated classified part of that resource. So using those inputs, here are the outputs: 2 billion after tax at a 5% discount rate NPV. That's at consensus pricing on the left, and spot pricing here is on the right. So at spot pricing at $5,000 per ounce gold, almost $5 billion. Our after tax internal rate of return jumps from 33% up to 60%. Over a life of mine of some almost 15 million years, we expect to produce around 2.7 million ounces of gold and almost 600 million pounds of copper. Our initial upfront capital to get started comes in at 1.3 billion. That includes 20% contingency, adding just under 400 million of sustaining capital. Our all-in sustaining cost over life of mine comes in at a very healthy $1,046 per ounce. A significant margin there, obviously, between that cost and consensus price of $3,200 gold. one of the key takeaways, which I think really makes Whistler stand out, is the very quick payback for a mine of the scale at 2.1 years, and that doubles at spot pricing. Looking at our production profile, very healthy, but also some room for improvement here. So over life of mine, we will produce around 250,000 ounces gold equivalent, just under at 246. The first 7 years average at just over 300,000 ounces, and that very quick payback is driven by the first 3 years of mine life, where we average almost 350,000 ounces gold per annum. Now, those opportunities I mentioned, because we're using the Whistler deposit only, it means that on occasion, because of mine scheduling, we're cutting back, removing waste to get to deeper parts of that mineralization. That means that our production is down in year 4, year 8, and 10 and 11. Now, if we bring in those additional resources, and I'll point to this on the map coming up, we have the opportunity to smooth out that production profile, to bring those years up, and hopefully produce a higher overall production rate with time. So that's a future opportunity that will require additional ongoing studies as we look to bring in those additional existing resources. So let's get into the virtual tour here, and I'll be able to show you where those resources sit in relation to the base case mining study that we've already completed. I'm going to take you on a little whirlwind tour of Alaska here. We're going to dive into this map area here first in South Central Alaska. So here we are. Here's Anchorage to locate you. This is our property out here highlighted in orange. Currently, we can fly in and out from one of the many airports in Anchorage to our airstrip at Whistler. It's about a 40-minute flight in a Whistler, in a Cessna 206. I mentioned that the state wants to build a road. That's this purple line here. It's called the Proposed West Susitna Access Road because it provides access west of the Susitna River. This is a major state-led roads to resources project. It will provide access to our resource development opportunity. There are also 2 or 3 other more advanced resource development opportunities along the route that has been planned. So we're just one of many beneficiaries. I think we're probably the luckiest, however, because that road leads directly to what will become in future our mine gate. That road will allow us to bring equipment and consumables in to future mining operation at Whistler, and to truck concentrate out for export from Port Mackenzie, which you can see is an existing report. So that road effectively connects Whistler with existing transportation infrastructure in and around South Central Alaska, and around 2/3 of the population of Alaska live inside the circle here in Anchorage, Palmer, and Wasilla. Diving into the property here, and I would just plug our website here because this animated presentation is available to everyone to view. Everyone can have full functionality here to dive in. You can zoom, you can rotate. It just gives you a good 3D visualization. I mentioned that we have 3 separate deposits that make up the overall resource inventory. Starting in the south here, you have the Island Mountain, but we're really focusing up to the north here, where there are 2 additional deposits. Whistler, of course, I already mentioned, which makes up our base case PEA, so it is included in the preliminary economic assessment. And our 3rd resource here, Raintree, which currently is not included, but it is one of those very amenable, locally, relatively closely located opportunities to bring in additional resources into future iterations of the mine plan. Just rotating the map here, I think the key takeaway is that although we're in Alaska and people tend to think of Alaska as being mountainous, the relative geography around the resource area here is actually quite flat, gently sloping, very amenable, easy to work. I'll just zoom out a touch here and point out some of the other features. So this is our camp, the airstrip that we fly in from Anchorage. And I already pointed out the proposed West Susitna Access Road. Again, same color as the previous map, this purple alignment. So Alaska is back to the east here, about 80 miles off of the edge of the map here. We're going to dive into the Whistler deposit here. Let's take a look. This is essentially putting you virtually into as if you're hovering in a helicopter right above the deposit. So we're looking down on the Whistler deposit, this rusty red colored rock that's been exposed here at surface just by natural erosion. This is actually mineralized copper and gold in the Whistler porphyry. Rotating around again, you get a good sense that there's plenty of acreage here, plenty of flat land, gently sloping terrain, which allows us opportunity to be able to find places to build the necessary infrastructure to facilitate a mining operation. Jumping down to the camp. So here we are hovering just over the camp. You can see the airstrip in the middle ground there, and then rotating back to look back to the north to the Whistler deposit, which is located up in the hillside here, just about 3.5 miles away. You can drive there up through the woods past the Raintree deposit and drive directly to the Whistler deposit inside of about 30 minutes. I'm going to take you on a deep dive underground now. This is the drilling that you've seen. These black sticks with the colors on them, those are drill traces. The colors denote the gold grades. I'm going to transition to copper grades here now. I mentioned earlier that we combine copper and gold into one simple unit of measurement, gold equivalency. So you can see that the hotter the color, the higher the grade. Over the first 2 years, as I said, we said in our use of proceeds that we would initially drill for 2 years, and on the back of those results, we would determine whether or not to undertake a PEA. Very strong results in those first 2 years of drilling, including a standout intercept of 652 meters, almost 2,000 feet at 1 gram per ton gold equivalent. That's made up of 0.73 grams gold and 0.16 copper. Contiguous high-grade mineralization from surface to depth in that drill hole. Zooming out now to look at combining the recent drilling with the sum total of that drilling. And here we have the block model or the resource model that is generated from that drilling. This is how we count up the tons and measure the grade to come up with the total metal content. So just spinning this around, and again, just a reminder, you can spin this around yourself if you visit our website and click on the presentation. I'm just going to dive forward in the interest of time, a couple of slides here, and move straight into focusing on the Whistler deposit itself. Very strong, robust, contiguous mineralization here above cutoff grade. This is a bulk tonnage style of open pit mine, so we can mine to very or fairly low grades of around 0.2 grams per ton cutoff. But what really drives that quick payback for us is the fact that we have a higher grade core. I mentioned earlier the hotter colors denote the higher grades. So red here, if I can find the legend and bring it into view, red and magenta color blocks are denoting block grades of greater than 1 and 2 grams per ton. And so just showing you that high grade core that sits at the heart of the system, this is what really drives the profitability and the economics, is very contiguous, and it comes right to surface. If I was to draw the surface trace on here, so the ridgeline profile will come down like this. Essentially, in the first few years of mine life, we're mining predominantly, obviously we mine from the top down, so we're mining predominantly high-grade mineralization, and therefore returning rapid cash flow in the early stages of the mine life, and that very fast 2.1 years of payback. So that's the exploration story. I'll just quickly wrap up here and make sure we leave some time for questions to point out that in addition to the existing resources, we have a number of exploration targets. We're very excited about the potential to add additional growth through exploration and discovery. If we just zoom out to a static map here, just to highlight that we have 3 very prospective areas. We call them mineral systems. These are broad areas that contain the potential for additional future discoveries. I'm just going to highlight one in the north here. Again, zoom back into the northern part of the property around the existing Whistler and Raintree deposits, where we have a very strong exploration methodology. We've identified well over 25 different individual targets. What you're looking at here are a series of those vertical gray-looking pipe-shaped structures, host diorite porphyries. Now, those are the host rocks that contain the copper and gold mineralization. You can see that we've used the Whistler deposit over here to calibrate how we interpolate the geophysics. Essentially, well over 2 dozen individual different targets that we are going to undertake a systematic drilling program on starting this summer. We're planning to get a couple of drills turning out here and get to work on making a new discovery. So I'll just finally wrap up with uh, um, basically recapping our overall strategy. Uh, the first track there is the mine development track. We've established that we have a very economically robust base case mining opportunity. We can also bring in additional resources to grow that base case mining opportunity in the short to medium term. In parallel with that, we have the exploration track, the potential to bring in additional future discoveries. Now, that's all great. We think there's significant growth potential there. We also recognize it's very important that we need to be able to permit whatever we find. So in order to do that, we are moving forward with base case environmental surveys, or baseline, I should say, environmental surveys and stakeholder engagement in order to be able to put the project on a clear line of sight through to permitting. And we're constantly working on our stakeholder engagement, and that includes the legislators, both at the state and at the federal level. You can see Governor Dunleavy in the top right photograph here, standing on top of the Whistler deposit with me a couple of summers ago. Very strong proponent of responsible, sustainable resource development in Alaska. The West Susitna Access Road that will connect Whistler with Anchorage is essentially a key legacy project of Governor Dunleavy's. We're working with his departments to make that a reality as soon as possible. Those road development projects are in permitting currently. And you can also see a couple of other members of the Alaska representatives or the Alaska delegation in Washington. You can see here Senator Murkowski and Congressman Nick Begich, who both also visited the site last year. So great to have representation in Washington also. And with that, Michael, I'll pass back to you for questions. I'll just leave the conclusion slide up here that just speaks to those key milestones completed to date and those two major parallel tracks, the pre-feasibility and development track, and in parallel with that, the exploration track that we believe can lead to future ongoing growth and value accretion for the company, for the project and the company.
Well, great, Tim. Thanks very much. Very interesting. We've had a couple questions come in. So let me read off a few. Just kind of thinking about the economics of how you're operating the mine. If I've understood your charts, you'll be mining the Whistler deposit as an open pit. Can you talk about what that means for your cost of production?
Yeah, so the cost of production is really the main metric there. I think that is comparable with other equivalent projects, is that $1,046 per ounce all-in sustaining cost. We believe that that's very competitive. Certainly, the pricing input with the rapid increase of gold and copper has been very beneficial for our project. We, of course, always keep an eye on rising costs, capital costs and mining costs. All of our cost inputs will be detailed in the technical report when that comes out. The technical studies, by the way, were managed by Ausenco, which was a very highly regarded mine engineering firm that has completed a number of comparable studies in the north and western part of North America. They have offices in Arizona, and also Vancouver, Canada, and have deep bench strength in terms of the subject matter experts and the database that they have on cost inputs, on benchmarked cost inputs. So we believe we've got a very good handle on the costs. Overall, we certainly view open pit mining as the most sensible and the safest way to mine, to at least get started with mining at Whistler. As you could see there in the presentation, the mineralization comes right to surface. You mine from the top down. So in terms of being able to access mineralization early, safely, and to be able to pay back on that capital as quickly as possible to return that initial capital investment and start returning capital to shareholders, we believe that open pit mining is the way to go. Now, because we have the higher grade core at both the Whistler and I should add at the other deposits, there is a longer term potential to go underground, but we probably won't think about that for the first 5, 10, or even 15 years of mine life. That would be something much longer term that could potentially turn this district into a much more long-lived mining district, potentially several decades of mine life. But our base case right now really just speaks to the first 15 years of that potential mine life.
Now, just following some of your slides, if I got it straight, at the mine itself, you're reducing your ore to concentrate and then shipping it out by rail. Is that correct?
The first part is correct, yes, although there's a second stream to add to that. So the type of mineralization is very common for a porphyry style of deposit. It's disseminated low-grade sulfide, and the copper is a type of copper iron sulfide called chalcopyrite. It's very easy to float that. We get almost 80% recovery of the copper via an initial flotation circuit. So basically, that flotation produces a copper concentrate. There's some additional phases beyond the initial flotation. They call it the cleaning process to get that point, to get that concentrate to a saleable point, at which point it will have a copper grade of around 25% copper and a gold grade of around 2 ounces gold. So that will be a saleable concentrate. No, there's no nasties in there, no deleterious substances. We will truck that from Whistler back down the West Susitan Access Road to Port Mackenzie. We can then ship it. We haven't done any marketing studies yet. This is really just the first stage of mine engineering studies. The preliminary economic assessment is the first step in feasibility studies, but there are plenty of smelters in North America, or we could look to export it. We'll look at what makes most sense and really who's going to pay the most for that product. Importantly, I mentioned that there's a second stage to that process. So the copper concentrate, the flotation stage, only gets us about 60% of the gold recovery, and we don't believe it would be a good business plan to send 40% of the gold out to a tailings or waste. So we undertook some studies to look at whether we could extract the remainder of that gold. And essentially, the second part of the circuit, therefore, is a common leach circuit, a CIP or a CIL circuit that then leaches the tails left over from the copper concentrate production. And that gets us an additional 35 to 40% of the gold recovery. So in total, we get that to that 89% total gold recovery, which I think is one of the best in class for a porphyry deposit anywhere in North America.
And as we're running out of time, I want to come back to the perennial question that's always raised. Do you think you'll be needing additional capital as you go along before actually producing any metal?
Oh, certainly before we produce metal, longer term, we certainly see opportunities to accelerate our studies. Right now, and our financials will be coming out relatively near term. And folks will be able to see that we do have treasury on hand. We have cash on hand in order to go ahead and commit to the work programs that we've set ourselves this year so far. But having said that, there are always opportunities to accelerate if the market is right, and there's an opportunity to take some more capital to accelerate those work programs, potentially to be able to do more in parallel to get to that production decision and ultimately to that point of development sooner, then we will look at doing that.
Well, terrific. Very interesting and informative presentation. We have come to the end of our time. Is there anything, Tim, that you would like to say by way of summary or wrap up?
I think just watch out for news in the near to medium term. We've identified some low-hanging fruit through our mine studies that we plan to get to work on right away. And we plan to put an exploration program out to the field this coming summer. So there will be news flow from potentially positive drill results. We're aiming to make a new discovery this year. So look for news on the exploration programs later this summer.
Well, terrific, Tim. Thanks again for presentation. Everybody, thanks for joining us. We look forward to seeing you next time. Goodbye, everyone.
Thanks, everyone.